Hello, everyone, and welcome back to the Velocity channel, where this is your bridge to financial freedom. Today, we're going to get into a topic that is going to help you in paying your bills more efficiently and pay off all those debts fast. I'm talking about really fast. But before we get into that, let's go ahead and have you like, share, and subscribe so that everyone all around the world can know the power of Velocity Banking. Listen, we have said this before, but we want to get a little bit more into it. And I feel that this is an area where people need to dive deep into. Okay, you need to really focus on what I'm saying here and how to pay the bills, especially your debt, so you can get rid of them, free up that cash flow, and put it towards assets. Folks, that's what the line of credit is for. Now, let's jump into it. We got the $5,000. Let's just say that's your paycheck. Now, what you can do is you can fill this circle with anything that you like. Maybe it's $4,000, maybe it's $15,000 each and every month. It doesn't matter. Let's just take this as your paycheck, okay? This is the national average. Now, what usually happens is that people start paying and they start segregating their income. You know, they pay for the groceries, they pay for the car loan, they pay for the mortgage, they pay for the credit card, they pay for all of these things, but they segregate it. Come on now. They segregate their income. And that's not really the most efficient way to use it, as we will get into. Now, we have loan one that can represent the mortgage. We have loan two that can represent the car. And for simplicity, all we have next is the credit card. Now, that's how you pay your bills, isn't it? Maybe you put a little bit of principal, right, towards the loan, so you think that you're getting somewhere with it, and you are. Because anytime you can break down that principal balance, you're breaking down also the interest that you owe on that loan. So good job, right? Because the interest is the parasite and the principal is the host, all right? So you're putting a little bit of interest, or getting rid of that little bit of interest, right? By paying down that principal, paying down the principal on the loan as well, and you're also paying your credit card. But what if I were to show you a method in which you can use your credit card, or you can use your line of credit as your new checking account, replacing this? Can I show you that? Okay, let's just go ahead and bear with me. I'm going to go ahead and show you how to not segregate your income so much. Now, these next steps I'm going to go over with you is going to be so powerful that you're probably going to want to stop the way you're banking right now and immediately utilize the Velocity Banking method. All right. Now, folks, of course, the consultation is available now, right? We have the link in the description below. Please utilize that. If you need to talk to us further, go ahead and let us know. All right. Are you ready? Let's do this. Notice how we changed the checking account into our Velocity account, right? We're using the line of credit. We're using the credit card to our advantage instead of to our disadvantage. Because before, we would pay this branched out, right? We would segregate our payments and lose all kinds of money through interest. Look at this. They gave us $100 a month to pay, $800 a month, $152. And while we're paying that, right, and ignoring the principal, the interest is just getting stacked up and stacked up and stacked up. We want to stop that and utilize the credit card. We want to utilize the line of credit that the bank so graciously gave us to our advantage, to stop or eliminate or to cancel that interest that we're being charged by just paying the minimum payment. Now, this is how we do it. We make sure that our income, where does it go? Into our credit card. So let's say you have a $15,000 line of credit, right? And you have $5K, right, going into this. Now, you're going to be paying your expenses from where? The checking account or the credit card? From the credit card, from the line of credit. And the key is to make sure there's a positive balance continually in that credit card, because when there's a positive balance, what does that mean? Right? When there's a positive cash flow, that means that the cash flow is paying down the credit card. So let's just say you have $2,000 each month paying off this credit card, paying off this line of credit, right? What does that mean to your credit card? Do you have to worry about paying it when $5K is coming in? No, you don't have to pay it anymore because you already paid it. So immediately you have eliminated that worry, right? Because you're paying it through your checking account. That income comes into the checking account. Once the checking account hits, all right, now we can go ahead and transfer. That's what we call it. We transfer that 5K or however much it is into the line of credit. And then from the line of credit, we are paying our expenses and our debts. Now, once this gets filled back up, you're going to be using it, okay? That's what lines of credit are for. You've got to use it. And guys, when I switch back and forth and I say credit card and lines of credit, did you know that a credit card is a line of credit? So I'm just going to be saying line of credit from now on. The line of credit, right, is going to be your tool to beat these principles. I'm talking about eliminate the principal as fast as possible. So that's why you got to chunk the principal here and you got to chunk the principal there as well. Now, how are we going to determine which one we should be paying off? Well, since you got a 5,000, we changed the we're not dealing with the mortgages right now. We're going to be dealing with the car loan, right? And we're going to be dealing with the personal loan, right? The credit card we no longer have to worry about because the credit card replaced our checking account. But in these instances, we're going to be concerned with which one to pay off first. What do I want as far as the elimination? Which one do I eliminate first? Well, we're going to go ahead and show you how to determine that right now. All right, since we're Velocity bankers, we no longer have to worry about our credit card because we're actually using our line of credit as our new checking account. So this is how we determine which of these to pay off first, which of these to chunk first, all right? We're going to take the loan balance, abbreviated by LB, and we're going to divide it by the minimum payment, abbreviated by MM, okay? That's going to give us our cash flow index. What's the cash flow index number? That's the number that's going to show you the efficiency of the loan. From 0 to 100, all right? It's going to show you, it's going to give you a number in which you're going to determine by the number, not the story, right? Not an outline, but by the number, which one to pay off first. So all we're going to do is we're going to go ahead and divide 5,000, and we're going to divide that by 152, right? 5,000 divided by 152. Then we're also going to divide 25,000, and we're going to divide that by 800, okay? What is that? All right, so I know a lot of you don't like math, so let's just do this, okay? Let's say the number is 31 on the car loan, and then the number is 33 here. Which one do I pay off first? The one that's closest to 0 is the less efficient loan, is the most inefficient loan. So we're going to go ahead and pay off the car loan, right? That means this one is getting the chunk, right? Whether that's 5,000, whether that's 10,000, whatever it is. Because the cash flow index model is actually letting you know which loan is giving you the most bang for your buck. Okay, it's letting you know which loan is sucking the cash flow out versus what you're getting, right? So here you're getting the 25,000, but check this out. You're bleeding 800 a month. Here you're getting the 5,000, but you're bleeding 152 a month. All right. And you can actually use the cash flow indicator to let these banks know, hey, this is where I am and this is how I make my determinations, right, on which loan to pay off first. Is it okay if we restructure this loan, right? Let's say the number was between 51 and 99. You can make sure that you're restructuring that loan and you can show the bank by the numbers where you got your method from. They may talk to their manager and be like, hey, this guy, this girl actually showed us an indicator. And so you may get more. Who knows? Who knows? I'm telling you, these banks, they do pay attention. A lot of people discount them, but you need to make sure that you are explaining it correctly. So go ahead and rewind this if you need to, and just reach out to me as well. Shout out to all those that take the classes. Man, you guys are ahead of everyone, okay? So listen, this is how you make sure that your debts, right, and your expenses are paid correctly. And this is how you're going to end up with less interest and that loan paid off way before the time, okay? Because you're chunking and at the same time, you're paying that minimum payment on those loans, okay? And you're not going to be someone who's like, man, I don't know what to do next, because the numbers are going to be showing you what to do next. Now, let's say you got yourself overwhelmed by these loans. What's next? Do you just give up? No. Reach out to us. Let us know what the story is, and then we'll help you out that way. Okay, we do the consultations, folks. It's amazing. And those that have Patrick, shout out to you, man. Patrick, shout out to all these other ones who have made sure that they're not going to stay ignorant. That's the main thing. Please don't stay ignorant when it comes to money. Make sure you're using the Velocity Banking way, and we will catch you in another video. God bless, and you guys have a great night.